Good afternoon, guys. We are having some fun.
Yes, we
Um,
are.
we are having some fun here, and we got FOMC at 2 p.m. We got an interview with someone who went on site with SenesTech. Brett, why don't you explain the SenesTech thing while I send something to our Discord? All right.
Yeah, sounds good. So what we're doing right now is at 1 p.m. we're going to have an author that's going to be joining us that wrote an article on SenesTech on TalkMarkets, and he actually went to the facility, visited the facility, met with management, got a little tour, and then he decided to write the article on what he thought. And I also believe he's a CFA, so Certified Financial Advisor, that will be joining us. So I mean, he probably has some very good intakes, and I'm pretty sure he used to be a hedge fund manager back in the day or something like that. So he has a lot of expertise in the industry, and he saw a lot of value in the company in the article that he wrote on SenesTech. So we're going to be bringing him on today at 1 p.m. to just like pick his brain and find more from him, and just being transparent with you guys, showing you guys what he saw. Because I mean, none of us have visited their facility yet besides him. So I'm looking forward to hearing his thoughts on that.
So is our hold on? Did he tag our Discord?
Not yet. I put it out there. We got to put live now.
Let's tag our Discord. Is the X working? I'm just the stream is yeah, okay, the X is live. Just want to make sure before I start wasting my breath, I want to get a good audience here. Let's see. There we go. Okay. So we're going to do some live trading here, some reviews for 15 minutes. Then we'll go right to a quick SenesTech interview. It's not a sponsored interview. We're just curious about this article that was written, and we want to talk to the author to see what he learned. All right. So in any case, another beautiful day for our picks. Closed yesterday here at plus 743% year to date. Our 12-month return is plus 1,500%. Some other folks out there trying to conflate 12-month returns and year-to-date returns. It was obviously a very good December last year. So in any case, look at this. Let's go to our top picks for today. Top picks for today. This was written at and delivered to you at 6:30 or 6:20 this morning, actually a little bit earlier than usual. And we gave you the first category here, SpaceX and space-based data centers are the top picks. And we told you all of these would be in play today. Redwire, VELO, Lunar, Rocket Lab, ASCS, Fly, DXYZ, Spire. But we zeroed in on Redwire and Fly. Redwire more from a swing perspective, and Fly for the day perspective. Here it is. And we actually, after our morning show at 9 a.m., we made Fly the number one pick of the day. So Fly, we gave a 23 to 24 target. See, it may enter it today with a 23 to 24 swing target. We also got VELO at 829 target, which it exceeded. So this Fly has been pretty good. I think I'm up 8 or 9 grand on it total today. Not enough to overcome my big positions in Kodak and Bull today. Let's check out Bull. Where is Bull? Yeah, they're both down today after some epic multi-day runs in Kodak and Bull. So I'll be down for the day, most likely. Just a little pullback in our performance. I could have pulled it off if I did very large position and Fly, but in any case, things are working out with the space theme today. The Kodak, by the way, which is coming up like probably the best performance of the year, best returns of the year, getting close there. It's competing head-to-head with ASTS. We've been all over this since the after hours on November 6th. We're like the first ones in this, and we've been riding it this whole time from 650 all the way to 10 almost, pulling back here a little bit today. The move is not over, guys. The move in Kodak is not over. There's more to go, but it's just pulling back here for the first time. And you got to follow our X. There's some interesting things going on. We're having some fun here with with X right now. But in any case, what else do we got going on? So Redwire, another one. Okay, so Redwire, even though it hit the 50 DMA, so we were all over this as a what was it? 12/8, 12/9, 12/5. Okay, so yes, on the Sunday night. So this closed at 6:39 Friday, and we flagged this as a January effect pick. And it's moved right to the 50. I was hoping it wouldn't. This is moving earlier than I wanted it to. But that being said, given the valuation, the relative valuation, and the space theme that's coming up here, I think Redwire can potentially get to $11 by mid-January. That's a big possible move, right? So even though we're at the 50 DMA, we did play it yesterday, and maybe it's Wednesday, right? So I probably did play intraday the last couple of days, made some money. But I actually started building a position in January call options. In a way, I'm hoping we get rejected here. I'm almost hoping at FOMC at 2 p.m. we get a pullback and we hit that 20 DMA or something like that on Redwire. I just kind of hope that, so we can kind of reset and get some good entries for the January effect and the seasonality. But Redwire has come along with the probably the worst underperformer in the space stocks today. Okay, so the space stocks here, you could see the leader for this SpaceX going public at 1.5 trillion. The leader obviously is going to be Rocket Lab on that. And ASTS, we've been all over this, as you know, biggest winner of the year and large position in both of our retirement accounts, right, Rhett?
Yep.
So these are some space stocks we're following, and then Fly and Redwire and VELO as well. It's that news at the investor conference last night. All of these are in play, and we've captured a lot of the alpha in these, or at least where I didn't capture the alpha, I gave you. I can't play everything that I analyze and predict. It's just a lot, so I give you options on what you want to action on. VELO, I gave you the target of 829, and it's exceeded it. And wow, where would the next target be on this one? The next target on Velo maybe would be 887. Oh, it hit that. It broke 887 today, 915. Yeah, maybe 915 might be in play, but I prefer playing this with Fly and Redwire. I think they're probably higher quality companies. So that's the space theme, and this is working despite any volatility that we're having. So FOMC comes out here shortly, and look at the strength in Bitcoin. That's another thing to look at. That's a clue here. Bitcoin is a great indicator of risk breadth and risk appetite. So we'll be looking at that and the reaction of Bitcoin to FOMC at 2 p.m. and we'll be live analyzing the presser at 2:30 p.m. for a Discord. We're usually pretty good at that and identifying like that turning point, that moment in the presser, and being able to. It's always the presser. It's always a Q&A. It's always a comment in the Q&A that sets the direction and sets the narrative for the rest of the day and the subsequent day or two. It's always something in the Q&A. So we'll be watching that live and trying to identify the turning point or that that comment which the media runs on and that thing that sets the narrative. So we'll be doing that this afternoon. And there is the potential, however, IWM's come a long way. So there is the potential that we see a pullback, sell the news. I do have some protective puts since I'm so long, and at this point, it looks like who knows? Probably I'll lose the money on that, but that's fine. That's what it's meant to be. It's just some insurance on the IWM puts. So we'll see what happens with that. Now, what else are we going to cover here? If there's any comments, you can go put them. If there's something you want me to look at, you can put it in the chat over there. Let's see what else we got going on. So we got all the space stocks. Did I talk about Kodak, Rhett?
I don't think so, not yet.
Oh, so Kodak has been a huge winner for us all these many days in a row. Wow. And just a little pullback here. I don't know how long it's going to consolidate for, but whenever it comes out of this little pullback consolidation, it will hit our targets. 1050 is the next obvious target, and then 1120 is a technical target. 1050 because that's where the insider buy happened Friday afternoon. 100 million shares at $10.65 by an insider, and we're still trading $1.20 under where the insider bought the shares. It's a little bit of a hidden story, but not too hidden. Okay, you can see we've been all over this, but The news feeds and the Benzingas of the world, and they haven't covered it. There's just a Form 4 filing, but there's no like press release or AI news on this. And it's also not clear that the buy was at 1065 because you have to calculate it, because the insider purchase was done through preferred shares, which convert to, it was 1 million preferred shares and it converts to 9.5 million common shares. So you actually have to take what they paid for the preferred, 101.5 million, divide by 9.5 million, and you get the effective purchase price for the common, which is 1065. Because there's that math there, that AI and the algos don't recognize it, so you don't see the articles out there saying, insider on the director on the Kodak board bought $100 million worth of Kodak at 1065. You're not seeing those headlines, but obviously the smart money, including us, we know about it, and we've been buying the stock all the way up towards 1065. And it will absolutely hit that level, in my opinion. Just a little bit of a pullback. All right. So that's beautiful. Bull, these two are my largest positions over the last week, Kodak and Bull. Bull is going to hit that 50 DMA maybe today. We'll see. If FOMC doesn't cause a market pullback or anything, then we're going to hit that 50 DMA on Bull, I believe. Okay. Little lotto we got going in DBRG with the SoftBank rumor coming from Bloomberg last week that SoftBank may be interested in buying Digital Bridge Group for $30 or something crazy, like even double from here. Very interesting, because the stock was only trading at $10 before that leak or it's a very interesting thing over there. Let's see, Rhett, what else you got on your radar? Oh, Galaxy.
What I'm watching right now is with the news that's been coming out recently on C3 AI. The daily chart looks really good. I think we can definitely test that 50-day moving.
Oh yeah, I mean it's right there.
Yeah,
it's right there. It's gonna tag it at 1640.
left.
A lot of these things are so close to the 50. I almost feel like they'll happen this afternoon. If I can't. Yeah, my IWM puts those hedges will go to zero, but it really feels like these individual charts are pointing to a pop in IWM. I don't know. Like the Godfather has been, hey, we're going to get a drop, a sell the news. He might be right. I mean, we've come a long way, but the charts are kind of telling me that might not happen, because also the RSI is not even overbought yet on IWM. So, I mean, we could move several more dollars on IWM. So who knows? Maybe we get a little, sell the news this afternoon on IWM. But if we do, I don't think it lasts, and I don't think it'll be deep. So that's that. All right. We will be getting, we have 5 minutes till the SenesTech discussion. So let me pull up the chart. So SenesTech, by the way, can you send me the link, Rhett, to the TalkMarket? Or maybe I can find it.
I have it right here for you.
Where is it? Can you send it in WhatsApp?
Yeah, I'm going to send it to you.
Here, okay. So I'm going to get that ready here.
I just also, if you guys want to read the article that's on TalkMarkets from Mark, you guys can go on our Story Trading X account, and it's right there. It's the first tweet up at the top.
All right. So we are going to be interviewing Mark Hake, who wrote this article on TalkMarkets. I'm waiting for it to load, but anyway, apparently he went on site. So I love to hear about that. I think he met management in person, I believe, and I think he saw the facility. So I don't know. This is taking some time to load. Is your link loading?
Yeah, it's working perfect here.
Oh, here we go. Oops. All right. So anyway, here we go. So this article was written a couple weeks ago, and look, we got pictures. We got SenesTech headquarters. I can't wait to dig into this. All right. So look, we know all about the company. So we'll hear his view on it, but I'm really interested in the on-site visit part of this because I never went on site. I never met management face to face, other than our interviews on this platform. So anyway, that's coming up in just a couple minutes. Let's look at the stock, SenesTech. As you guys know, SenesTech is a sponsor of Story Trading. This particular segment is not sponsored. It's just out of our own curiosity. But in any case, SenesTech, you can see when we got involved in this, it was around $2. We dipped down to 130 after this was happened, when the market was crashing, the Liberation Day crash, and then boom to $6. It was a big, huge moneymaker for a community this year, but it's pulled back from $206 to $290, and I have to say there might be some tax loss selling pressure here. Let me just check. Let's see what our average purchase price here is. I think there is. I think we're underwater. Let's put on this data here. Yes. At this point, I think the average purchase price is probably somewhere around 380, 385. So it's possible that we're going to see a January effect in this stock. Do we have time to talk about the January effect right now? No, we don't. Okay,
No,
so
I'm gonna hit the countdown.
hit the countdown. All right, let's go. All right, welcome everyone to Story Trading. We have Mark Hake here. Is that the right way to pronounce your last name?
Yeah. Can
Mark,
you hear me okay?
Yes.
Loud and clear.
Welcome to the show, Mark. We saw your article here on TalkMarkets, SenesTech's 43% revenue surge that nobody's talking about. So, I mean, maybe why don't you start? You did the research on the article on the fundamentals. Maybe give us your perspective on the opportunity and the fundamentals first, and the financials. And then after that, I really want to dig into your on-site visit.
Yeah, let me just give you a little background on who I am first. I'm a CFA, and I'm a former hedge fund manager, money manager. I'm semi-retired, and so I write articles on stocks right now for fun, basically, and I get paid, but I write for barchart.com, and I also have all my articles on TalkMarkets, which I really like that site. They did ask me to look into SenesTech, partly because I live here in Phoenix, but also because I've written bespoke articles before for TalkMarkets. But since they're local, I thought, okay, I keep track of a lot of local public stocks, and this was at the literal bottom of my list. It's only a 20 million, or what is it, 15 or $20 million market cap. Yeah, $15 million. So that's incredible. And I thought, okay, they got 10 million in cash. So something's going on here. Let's take a look at this company. And just, because the cash is such a large part, and I knew it was burning cash, but I really insisted on wanting to go see the company and actually find out if it's actually a real company. A lot of times, you can get scammed by these kind of small market caps. So, and I've been scammed before. So I decided it took me a while to get the visit set up, and I've actually visited the management twice. I visited the actual operations floor twice, because the first time I went, we had a miscommunication in emails, and the CEO and the CFO were not there, but Dean was there, and he's the head of the line. So I just said to Dean, "Hey, Dean, can I just take me behind the door here and I want to really see what's going on?" He said, "Yeah, no problem." So now you have to understand, this is in a really modern looking building, and it's a very large building. It almost looks like an office building, but you can tell there's a warehouse in it. So I really wanted to actually see the actual line where they produce the sausages and things like that.
Do you happen to have any pictures you can share, or should I just bring up
Yes,
the article?
I did take pictures, but they refused to allow me to take pictures inside the actual plant. I could only take pictures outside the plant.
So let me just bring up what was here in the article. Kind of, maybe you can walk us through what you're looking at. Okay, so we got these two images here.
That's actually when you walk in the door. But that door right behind him there, that door leads into the plant and warehouse portion. That the initial area is where they have their offices.
So that the corporate offices are together on the same campus as the warehouse?
Right.
Okay.
Yeah. Which I like. And also the R&D people are there too.
Oh,
as
cool.
Well.
Nice. Did not know that.
I think the next visit I have, I'm going to try to go visit them every quarter because they're literally only about 10 miles away from where I live. They're over in Surprise. I'm in, I used to live in Scottsdale. Now I live in Glendale. So Glendale is not that far away from, it's actually Peoria / Surprise, which is our two major west suburbs of Phoenix where a lot of growth is occurring. That's where the TSMC plant is, the Taiwan semiconductor chip plant, and a lot of really fast growing areas and the new 303 highway. So Dean took me back and I immediately saw how high the ceilings are, like 50 feet high. They have a lot of storage, and then they have a very simple line that produces the sausages. I call them sausages, but there's meat, right?
Yeah, the bait.
Is it like an automated line? Like how much technology?
No, they're producing these sausage links, and they pour it all in a vat. They pour the basic material, and then they include the cottonseed oil, and I asked him to show me the cottonseed oil, and I smelled it, and you can't even smell anything, the cottonseed oil, and it's just in a little bottle. And then all the other elements, the sugar and all the other stuff. And really part of the reason they said they didn't want me taking pictures is because it's really, the mix is the secret sauce, right? The mix is why nobody else can really repeat what they're doing, right? None of the materials that they have in the sausage and remember, SenesTech is making a birth control sausage, right? And the rats and the mice love it. They love the smell. They are highly attracted to it, but it creates a birth control effect both in the sperm and in the eggs of the mice. Now that also brought up something. I asked Dean about that. I said, well, okay, so typically what will happen is a customer will.
I'm sorry, I missed it earlier. Dean, what's his position there? He's
like the head of the line operations.
Oh, cool.
Okay. And he sort of, and then when I came there, the people were on a break, but then after a while, after I walked through they were back to making the sausages and stuff and putting them in the pails and the bags and then shipping them out on Amazon. They have a couple of people doing the Amazon sales. Now, so the most important thing that I found and I began to realize was that when somebody buys this stuff and they've got a big problem with rats and mice, you'll get an initial spurt of sales from them because they'll want to put it everywhere and they want the mice and the rats to be eating this stuff. And then after about a month to 5 months, the population starts to falter because they can't reproduce. And remember, rats and mice reproduce very, very quickly. Two rats or two mice can make 15,000, rodents in a year. So it's just incredible. So here's the point I'm trying to get at. Even though there's a spurt in sales and after a while the sales go down from that one customer, they can't completely go away. They have to continue to buy the product because if they stop feeding the rats and the mice that remain then the birth control effect will go away. And it takes about 3 months for that to go away. And then you'll have another spurt in population. So there's a maintenance effect of these sales. And I call it a recurring sales element that I really like about this company. That once they get a client, that client will be hooked and they have to continue to use the product to keep the rodent population low. So that was the very first thing that I began to realize after talking to Dean. And I saw also how they've built up they've got a very large inventory position that seems to be about what they expect for sales to be over the next 2, 3, 4 months, maybe a little bit longer. So they've got plenty of room. And they also told me that they've got room to grow as well with that new facility that they're in. And I looked at the other product. There wasn't a lot of activity with the other product. I forget the name of it.
Contrapest.
What is it?
Contrapest, the liquid.
Yeah, it has to be kept in a storage. So they have a refrigerated storage area, but it's not that big. The truth is 85% of the sales now are with Evolve. So that's really the company, and the margins really show that. Now, I asked them, well, where do you stand with competitors? They say the only competitor they know of is some group out in Texas that's not public, that's using a similar cottonseed oil product to control. I guess they have a hog problem in Texas or something, or
the feral hogs. Yep.
Yeah, so that's kind of what the group is doing. Then in my second visit, I sat down with the CEO and I said, well, look, how did you guys find this product? How did you figure this out? And really, it boils down to the CEO. He lit a fire under their R&D people and said, we need to find something here. And they went down the list of products or of items on the EPA list that do not require any kind of oversight for rodent control. And they did some initial studying, and they found out that cottonseed oil is on this safe harbor list, and it seems to be the most effective in controlling birth control. So as a result, he lit a fire under them, and they figured this whole thing out. And I really put a lot on the CEO for how he figured out to get to this product, and it really is. If he could figure that out, then there must be some other things too down the road that could be. And I even talked to them about that as well. But I'll get into that in a little bit later. So the other cool thing about this company is, yes, they're burning cash, and they figured out how to get this cash. And it's nice that they got a brokerage firm behind them. But what are they going to do about this cash burn? And if you want, I can talk about that as well.
Yeah, absolutely. Before you do that question, I want to get to, so let's do it now. In terms of did he see any indications of, I guess there's two things. One is in terms of scaling that manufacturing, right? Like how much room did they have there, both in terms of physical space and just capacity in terms of how you saw the operations working and that line working? Like if they get some huge order from New York City, is that something you talked about over there? Is that something?
I think there's not going to be any issue with that. They have a very large warehouse now. There's really no difference between the warehouse storage area and the production line, and also the shipping line. The R&D people are in a separate room. So I don't see that that's going to be any. In fact, I think they were telling me they've got room to grow under their lease as well. In addition, what really is important is the international sales. I think international sales could really blossom and could push this. You might get an announcement somewhere in the next quarter or 2 quarters or year saying we just had $1 million sale with such and such country, right? Because they've got I think it's 18 different countries now that they're approved in. They just announced one for Belize. And remember, they've got to fill up a container is basically, several pallets full. And they told me that's worth between $200,000 and $250,000 per container, right? So let's say they could do 5 containers a year, 4 or 5 containers a year to just one country. That's $1 million in sales. It could just dramatically improve the outlook for this company. And I think that's more likely to happen than just about anything else in terms of dramatic catalysts for this stock.
Did you see any clues from one of your, I forgot his name now, the production line guy, and from him or just the facility that we're looking at, any clues or any reading between the lines that you said, hey, these guys know a big order's around the corner? Are they preparing for something huge? Did he get the
No,
sense?
they wouldn't tell me that. I didn't.
Of course, they wouldn't tell you. I know they're
Yeah.
not going to tell you, but did you? What's your own feeling of that? Were you able
I just
to read
wanted to
into
make
anything?
sure that they look in terms of due diligence. I wanted to make sure that was a real company first, right?
Okay.
I wanted to make sure they were actually producing the sausage. So I saw them actually producing the sausage. I wanted to make sure there was actually people on the line. And that's what Dean is responsible for. He's responsible for, scheduling everything and matching line production with expected orders. And then the second visit I had was with the CFO and CEO. And I wanted to talk about, more top-down things. But the main purpose of the visit was to make sure it was a real, actual company, not a scam. Okay.
Okay.
So it is. Okay. And I'm a chartered financial analyst, so I have to abide by certain codes of ethics.
Okay.
So I can tell you that it's a real company, right?
Mm-hmm.
It's making real sales. And of course, you can tell it's a real company too, by the way. And I discussed this with them because of the Amazon sales. Now, the interesting thing about Amazon is that it actually tells you on the Amazon site how many units have been sold of the actual product in the past, month. So you can use those numbers, which I did, and I brought that up to them, what my estimates were. And they said, yeah, that's roughly what we did at Amazon in the past month. So if you're real meticulous and you go, and I put together a spreadsheet, and I for each of the products, for example, the 1.5 Evolve Rat, the 3.0 Revolve Rat, the 6.0 Evolve Rat Pail, the 1.5 pound Evolve Mouse, and then 3-pound mouse, 6-pound mouse. You can go and see what the Amazon. And then you can, and I estimated that Amazon takes about a 30% cut from those sales. Now, I talked about that to them. I said, can you bring more of these sales in-house eventually? Because, their online sales are mainly with Amazon, and they've got Home Depot and a couple other groups now, and they're selling off their website. But the more that they can do with their Shopify website, that'll cut out that 30%. Over time, I think that's probably what'll happen. But right now, their main online sales are with Amazon.
Awesome.
Amazon FBA, fulfillment by Amazon.
And then in terms of going in-house, like I know they're on Lowe's.com, HomeDepot.com, anything like that. Did they mention anything about that in terms of like percentage-wise, if they were to land in those stores, how much of a cut they would be?
Those are just starting, and again, they're almost like teaser sales for. They want to see how well they do, so that the company then can get inside stores, right?
A question from the audience here. Did you see any indication that new products are being developed? I guess
Yeah,
there's an
no,
R&D center. You said there's an
I
R&D?
talked to them about that. And I'm a very practical person, and I kind of tried to put myself in their shoes. And I said, look, when people go to Costco, they don't give a crap about birth control versus, rodenticide. They want to buy something that's going to take care of the problem. And people are really dumb. They don't really have time. I said, so what are you going to do about that? You got to put together a product. Have you thought about putting together a product? And they said, yes, here's what we've thought. And again, don't hold me to this and don't hold them to it. But they've had certain situations where farmers and agriculture type people, they've noticed that if they put the pails in a certain part of the farm, the rats are all attracted to that area. And then they can get those rats away from the cows. Okay. Mm-hmm. And so in effect, it's not a repellent, but it's an attractant. And so we talked to them about having the product as an attractant. Okay. And you can sell a product as an attractant and then put traps around it, or just to get it away from a certain area of your farm or of your building or something. And then you can do a secondary thing. Maybe you don't even want to get rid of it. I don't know. But so that's actually another potential product. They essentially may or may not include the cottonseed oil in it, and that really, and I said, well, if you didn't include the cottonseed oil, you would call it a new product, right? So yeah, and it could be an attractant type product, and it is still essentially attracts the rats and the mice. But then you got to do something else about them. But the point is, that's a new potential high margin product, very high margin, and it might even be more mass product than just a burst control. So that's something to think about. And they clearly, I think, are thinking along those lines.
And in terms of their boxes, are they building their boxes in house as well, or are they getting outsourced from those?
Well, they have pails and then the plastic. Yeah, those are all prepackaged. I don't know where they get that stuff. Their main cost of goods stuff is the inputs, the flour and the sugar and the cottonseed oil and some of the other, and then the sausage links. They've already, think about it this way, they've already spent the money for the sausage making. That's already sort of sunk cost. So any additional new sales or dramatic increase in sales, that's only a variable input cost, not a heavy capex cost. Maybe they would have to run the line longer or something, and more than just 40 hours a week, which I guess they're doing right now. So if sales really took off like that, or they could buy another sausage making line, and then and that's not really that much equipment too, from what I could tell. It's really not a lot of equipment.
Awesome. And then in terms of other expansion too, I saw 3 weeks ago they actually put another job listing. So they filled the one job listing for, I think it was Central in the United States, and now they have another job opening in California. If they filled that position?
Could be sales or something. They have salespeople, so that's what they're trying to fill out is sales team, and that's really where they need help, is sales more than anything else. They don't really need to control. They just hired some guy to do, I don't know, cost control or something. I don't know what the hell he's going to do. But the main point is they need to really build out their verticals. But I think what they're going to have happen over the next year, which is why I really pressed them on this, and I want to get into this too, the financials. I really pressed them on the claim or non-claim that they're going to get to, cash flow positive by next year. Now, my estimate is when they say that, they're really only meaning it on the very last quarter on a run rate basis. In other words, don't expect for the company to be cash flow positive next year. I think that by Q4, they might be close to running cash flow positive for that quarter on maybe an adjusted basis. But that would have to assume that there's been some major catalysts happen in sales, because right now they're running at about a $5.5 million cash flow negative rate based on my calculations on their run rate from last. And if you deduct the $111,000 in legal fees, it maybe is a $5 million cash outflow. They've got $10 million in cash. So theoretically they could last all through next year and the year after. And I think that's plenty of time for them to get cash flow positive. If they don't, then something's going wrong. Then their sales really haven't kicked in properly. And they really need to be thinking about other types of products other than just Evolve too. So, and I brought up some ideas to them that they might think about as well. But anyway, so through the cash burn, if they get that under control, the stock should be able to be quite a good investment, I think. But I don't like investing in stocks until they're cash flow positive. So I personally am waiting on that. I want to get some sense that they've got that they're on some kind of run rate to get that under control.
Okay.
Sounds good.
And did you get a sense of what, where you mentioned international? You think that that's a big area that you could see kind of a huge order. I've been, when I first got introduced to this story, the thing that I was always intrigued by was New York City. Oh my gosh, if they get a New York City order, that's like instant hockey stick growth to many millions of dollars a year. And hasn't happened yet, although we're hearing good indications from that. Is my hope misplaced in pinning that as the major hockey stick growth opportunity?
Yeah, they seem to be very close, and on both in Chicago and in New York and a couple other cities. That I guess they had to jump through a bunch of hoops and prove to the local authorities that the product was effective. And so I think they're on the verge of getting some very large orders. But they're not going to tell me that, and they're not going to tell anybody that until the actual orders are in hand.
Yeah.
And I don't think they should either, by the way. And even signing a contract doesn't mean that much. I think they ought to wait until they actually have an actual order for the product. Because this is such a small stock, and you really can't. What are you going to do if the order doesn't come through and you already announced it? So just wait till you get the actual contract order, and that's something that you can hang your hat on.
But what's your sense, out of all your conversations and the research you did, what is the nearest term possible catalyst for hockey stick growth? Is it New York City, or is it something else?
I feel like they've got they've got 6 verticals, right? And that's one of them is the local authorities. Then they have the pest management control, and they also have very large customers that they presently have. You have the international, and I forget the other two, but I think the largest one, the one that I think is most obvious, is the international and the local authorities ones. And then in addition, they've got the ability to grow with new products. But at least they have the cash on their balance sheet. And remember, it's a 15 million market cap, and there's 10 million of cash. So theoretically, if they are correct, and they only burn $5 million over the next year, and by the end of next year, they're cash flow positive, i.e. 2027 Q1, they're not burning cash. That means that they would still have $5 million literally in the bank left after they become cash flow positive. That's theoretically. So the value of the stock, the net value at $5 million seems kind of ridiculously low at this point.
Mm-hmm. Yeah,
you're sort of, look, this is a heavy gambling, speculative play. There's no way I can estimate its inherent value. Okay.
Okay. Look, I actually have some in my retirement account, and I guess it depends. People have a different interpretation of gambling speculative. I don't know. My own take is that it's a pretty good risk reward. They have 2 years of cash, optionality, upside if they get like a New York City thing. I don't know. You really feel it's a heavy gambling speculative?
Yes, because what happens if you're halfway through next year and they say, well, it's going to be the end of next year that we become cash flow positive? Well, then that means that they will burn through all their cash.
It all depends on when some huge order comes in.
Yeah, but what are you going to do if halfway through next year, 2026, they do a recalculation saying, well, it's not going to really be to the middle of next year or the end of next year, i.e. 2027.
Yeah.
There's nothing preventing them from moving that date out. And yes,
I get it. All I'm saying is, look, it's everyone's personal risk reward decisions. I've been very comfortable owning this in my retirement account, and I think there's a lot.
Let me finish. All right, let me finish.
If
they say that they have to move that period out, that means they're going to have to raise more cash,
right?
And that's more dilutive to the stock and believe me, that, the Wall Street people at that brokerage firm, that's what, they'll take advantage of that. Right. So the stock's going to be down to 50 cents to $1 then at that point, if they have to redo cash. Right. So that's the downside risk. Heavy dilution. So yes, it could become profitable then, but what will be the value of the company by then? So you have to really keep all this in mind.
Yeah.
Okay.
Mark, we got 2 minutes left. You want anything you didn't touch on quickly that you want to touch on?
I'd like to highlight that I'm coming out with an article. This is unrelated on GameStop today.
Oh, cool. GameStop just reported last night.
In barchart.com. So take a look at that.
Okay.
I write for Barchart every day.
Oh, every day. Nice.
Yes. And
what's the best way for people to follow you?
Just go to barchart.com and look me up as an author. And I write about stocks from a value standpoint and also options. And Barchart has heavy options today, and so I write about the value of this.
You mean GameStop? GameStop.
GameStop. I mean, they came out their earnings last night, and I did a sum of the parts analysis on the stock.
Yeah, I mean, I didn't look into the details. The headline looked like it was a pretty big miss. But do you also have like an X account or something you want people to follow, or just Barchart's the best way?
Yeah, just follow me on Barchart. That's fine. I have a LinkedIn account right now.
All right, it's just under there, Mark Hake on Barchart. H-A-K-E.
Awesome. I have one last question before you log off, Mark. So would you have a chance to talk to any of the salespeople? Because I know like salespeople kind of make the company take.
Yeah, that's a good point. I'd like to do that next time. Every time they come out with earnings, I'm going to stop by. I'm going to visit with them because I want to I want to see what changes I see occurring in the plant. I also want to talk with the 2 R&D people that they have as well, but I have to get permission, obviously, from the management.
Yep.
Okay, awesome. Appreciate that. If you want to read that SenesTech article, it's just go to TalkMarkets.com, I guess, and put in the ticker symbol SNES, or put in let me see if I put in your name. Do you show up there? Let me try that.
Yes,
Mark, it shows up. So either put in Mark's name or put in SenesTech, and you can get that SenesTech article. Really appreciate your time, Mark. Yeah. Keep us posted. If you learn anything new, let's be in touch.
Okay, thank you.
Take care.
Have a good one.
Bye-bye. All right, Rhett, we're going to stay with some live trade. We'll hang out for like 5 minutes.
We're going to have to create a new link because this is live on YouTube as well.
Okay, I think we can change it. Let me see. Does it let you after the fact here? I think maybe. Let me try. All right, I'm going to hit unlisted here on YouTube. Let's see if it works. I changed it to unlisted here. I don't know if it retroactively actually works on YouTube, but if you want to check that. But we'll stay anyway. While Red is checking that, we'll check in, do some live trading for next few minutes, and then we're going to continue on X into FOMC. I mean, on our Discord for our Discord members into FOMC. So what do we got going here? Is the space theme exploding? Man, I was just talking to my buddy about Iridium last night, and basically every single space stock is going to have its day here. Another tax loss selling candidate right here, breaking above the 50 DMA. So, man, everything is moving. Even here's another EchoStar, $29 billion, just jumped 8%. This theme is hot, and it's going to stay hot with these space-based data center theme over here. What else do we got? Oh, RDW. I'll talk about that in a second. Even this penny stock here, 35 million, up 30%. Ross gave us a heads up on that one. VIA, I think, is another one that was just mentioned in our Discord. So look, it's green all around. Well, these not version galactic, almost. Well, most of the green and Redwire breaking back above the 50 DMA. We'll see if it can close above the 50 DMA. 731 is a 50 DMA. I did start buying January call options on this one. Again, potential by mid-January for $11 or so. Just a little preview of there's going to be like dozens of stocks that have huge moves, end of December to mid-January. We're going to identify a good 10 of them. And last year we had a 90% hit rate with massive returns. So we're going to try that again this year. You got a preview. RDW was one of them, but started moving before the January effect kicks in. So this is all in play. All of these, oh my gosh, all of these space stocks. Fly, all right, not giving up on this. In fact, I sold a little bit in the 2150 area, and I bought back here on this dip. I think Fly is heading to $23 very soon. And let's see what else we got over here. It's all about the space theme today, man. It's all the space theme, which was our number one pick at 6:30 this morning in our newsletter. It was all about the space theme, and it is crushing basically everything else, right?
Yep.
Look at that. Look at that.
I mean, when you get valuations like that coming out, I mean, that was unbelievable.
1.5 trillion. Yeah, but I think it's also very much about the, all the hype we've had in data centers. So all that hype and all the demand in the data center stocks, Cypher at all, is now transferring. That sentiment and that demand is transferring to the space stocks. So it's not simply about, 1.5 trillion. So now we have to re-rate every space stock. That's a portion of it. But I think it's more about that positive sentiment of data centers. It's like, all these space stocks, they're now data center plays too. I think that has a lot to do with it. So, no, man, the only exposure I have is Fly and Redwire today. Obviously, I wish I was more aggressive on this because I have about 5 times the weight in Kodak and Bull, which are down today. It served me well for the last 10 days or so, but that position in Kodak and Bull keeping me down. I don't have enough space stocks to make up for it, but we'll see. We'll see what happens by the end of the day. You never know. Maybe that Fly explodes right to the 23 target by the end of the day today, and that'll definitely help make up for Bull and Kodak. All right. So with that, I think we're going to have to say goodbye to X. If you want to join our community, just tap on our profile. You can join us there or go to storytrading.com to join us that way. And we're going to continue live trading probably till about 3 p.m. Rhett, you might have to duck out a little early.
Yep.
We have a meeting at 3. So we're going to continue live trading till about 3, FOMC at 2, FOMC presser at 2:30 with real-time analysis. So we'll see you later on X. And if you're on our Discord, just stay right here.
All right. Let's see. Give me 1 second. I don't think this worked.
Well, the X we can cut off here. Let's do that. Okay. That's fine. It's not we don't really advertise on YouTube anyway. So if there's 1 or 2
We got 14 of you guys, so maybe it is only us. I don't know.
Yeah. Okay.
Let me look on my phone to see.
Anyway, look at this pop in Bitcoin just now. Look at that. That's beautiful.
Yeah, that is nice.
So I got to get the CNBC ready. Let me just check our Discord. Oh, is this something that just came in? Hassett with strong showcase of data could secure 50. That's why. Okay. So some comment from Hassett about 50 basis point cut. You could definitely get 50 or more. See about today or in general next couple hours. A lot of negotiations get to 20. Repeats it. To reduce interest rates. Futures. So these comments from Hassett is what's causing.
No, I guess we're good. It went off. So trust our community on here, guys.
So this is what's causing this move right now. Bitcoin, and that's your leading indicator for risk. And IWM, I bet you a lot of so IWM, not a big reaction from IWM. The stocks underneath probably are reacting better. This Bitcoin. Look at this Bitcoin. Wow.
Definitely. All right, I gotta log off here. I gotta do a few other things. I'll hop back on.
Oh,
here
you're gonna leave me alone? Okay, fine. All right.
All right, I'll see you guys in a minute.
All right, fine. All right. So let me just tag everyone in the Discord that we're back to our live trading. Okay, 1 second. Live trading FOMC. Where did I get this view? YouTube. At everyone. View over Live trading and FOMC now. Okay. All right. Let's just wait for a couple more people to log in while we look at this Bitcoin bump on the Hassett remarks. This is kind of a leading indicator, man. I don't know. I have to wait for what happens, but Bitcoin has been a better thing to monitor than IWM in terms of strength underneath and good breadth. So just gonna poke around and look at these charts until I wait for some stragglers from our Discord to come in. And yeah, man, my IWM puts are like toast right now. See what happens. TLT down on this. Doesn't like Hassett's comments. Gold down. I don't know, man. I can't figure out gold lately. Look at this, just nonstop. At least I got the Galaxy calls. Wow, Galaxy maybe red to green here. 4 more cents to red to green on Galaxy. Okay, so I got a few more people. I just want to address something here that I feel very strongly about that I got to mention. Got a negative reaction from Godfather and Ross on this little spat that I'm having a stock talk. And look, I have no problem having respect for stock talk and praising him for his returns. And I've done that in the past. And I do that. And I have respectful relationships with lots of other people, including Ripster, and we're able to share ideas on X, including Undefined Mystic, Penny Check for the most part. I got into a little bit of a spat last week because he called me out. So I had to defend myself there. But, that's how I roll. I'm okay with competition, and I'm okay having relationships with folks, and I'm okay recognizing when someone else is great at what they do. Say, hey, Stock Talk, you're good, but we're on the same level. We're in the same league, and we can collaborate with each other. But Stock Talk's the only one who basically has repeatedly blocked and unblocked us, and his never reciprocates. He doesn't want to have a relationship. When we give him a kudos on something, and then we also with Logical Thesis, he's great with us, right? We have that back and forth. We have competing services. He's doing a great job, and I praise him. When he has good call outs, and but Stock Talk has to go and block us, and then go make this outrageous claim, that no one provides, this transparency and this alpha. Not one. No, it doesn't exist on X, right? Obviously, when he says that, he knows that's not true. Otherwise, he wouldn't be constantly blocking us. Okay. Sorry, Rhett's back here. I don't know if you heard what I was saying.
No, let me hear it. I'm just saying.
Yeah, well, so in any case, that really rubs me the wrong way for multiple reasons. But it's just, I'm sorry to say it, but that kind of behavior to me is, me, my honesty and transparency and integrity. And when someone is doing that, obviously purposefully, so he is not able to maintain a professional relationship and have respect for other people at his level. Instead, he has to go and block us to pretend to his followers that he's the only one in the universe that has returns like that. And I'm not going to let that go.
Oh, I was just looking at it. He's not. That's not the only one that's blocked too. There's a lot of big other influencers that he blocks.
So to me, that's a warning sign. Someone who's unable to acknowledge that there's competition out there and have these respectful relationships. He goes out there and he likes to pretend he's the only one, and he blocks everybody. I haven't blocked one single person. I don't care if their returns are better than me. I haven't blocked anyone, and I'm okay saying, hey, you have great returns. Great, congratulations. You're good at this. We're good at this. Whatever it is, and let's collaborate here. Stock Talk, no, he is cutthroat. And when you're willing to do that, you go and you block someone and then make a claim fully knowing it's a false claim. Okay, fully knowing it's a false claim. He knows we're in his. That's why he blocked us. He knows we're in his league. He knows we offer the transparency. He knows we have the alpha. Why do you think he switched from 12-month year-to-date returns to 12-month returns? Because it's trying to be underhanded. And I'm sorry, I'm going to call that out. You can't go out there and say we're the only ones who offer transparency and give this kind of alpha. You can't do that. I'm sorry. So there you go. To answer Ross and the Godfather on that, and I think it's appropriate to call that out. I'm sorry. That's what I think. I don't know. Rhett, you got any thoughts on that?
No, I think when there's bullshit, you call it out.
I'm with you. Call people out.
So sorry for my language, but I mean that's what it is. There's a few other people too that have.
There's tons of people that
blocked us as well for saying how we feel about things. But at the end of the day, you guys see it every single day. We update the official trade account portfolio. It's in the morning note every single day for you guys. So if anyone's wanting to question, feel free. Pull up each morning note. You see the returns. So
there's tons of great services and influencers out there. And, countless times I have back and forth and I'm, I'll comment, I'll be like, great job. And, we're doing well too, or whatever it is. And we get kudos back right there. It's like, great job, Ben. Yeah, you're killing it too. Like we get that from everybody. Stock Talk's the only one who will go block you and then make this claim like he's the only one. And I'm sorry. I'm gonna call that out. Sorry, guys. All right, so you're just gonna have to deal with that. Ross,
I like
friend. Ross, my good friend, and of course, Godfather of the GOAT. So that's my take.
Izzy got blocked too. So if anyone calls him out, you get blocked.
That's it.
So
he just blocks everyone. I don't respect that, man. That's it also shows a weakness that you feel like you can't compete in a market of free ideas. That's what it shows. All right?
Yeah, no, without a doubt.
I haven't blocked us all. Go say whatever you want, man. Show your performance. That's great. There's room in the market for dozens of people who are great at what they do. And I recognize Stock Talk is great at what he does. I have no problem with him. And I'll praise him, when he has good stuff. So in any case, he doesn't want to do that. He doesn't want to collaborate. He wants to pretend that it's only him in his universe. And that's fine. He can continue being in his smaller and smaller own universe as he goes and blocks everybody. That's my take on it. All right.
All right. With that being said, I'm peacing out again. I got to finish this.
Sorry.
See you later, Rhett.
You guys.
There, we got 15 minutes to FOMC.
Oh, yeah. That's the big
15 minutes
thing today.
FOMC. I don't know. The big thing's the space stocks, man. Unbelievable.
I was just gonna say, I think the big thing today is your battle on X here. That sounds pretty.
Yeah. Well, we just had Hassett giving really bullish commentary on rates. Hassett, which I think it could be the next. I forgot. I think that's one of the candidates. I think to be the next Fed chair, if I'm not mistaken. So you saw Bitcoin just exploding on this, and Galaxy doing a red to green on it, which is great because my target's up here at 3250 or so. So that's a big theme right now. What's breaking right now? The strength in Bitcoin. Hassett comments: is this front running and making this FOMC irrelevant, right?
Probably.
That's what might be happening here. I think that's what they're doing. I think they're getting ahead of this.
Trump talked yesterday too, last night.
To try to inoculate themselves. Yes, and that was last night. And all of this from Trump and Hassett, this is to try to inoculate themselves from, if there is a hawkish cut here, they're trying to get ahead of it to make it irrelevant. And, who knows? They might be successful. I don't know. Bitcoin loves it. Bitcoin loves it. And as I said earlier, the IWM chart, the RSI is not overbought yet, and it has room for several dollars to the upside before getting overbought. So I just don't know what's going to happen here. I'll say this, and I agree with Godfather on this from the Benzinga show. If we get a sell then use event here, I think it'll be short-lived and shallow. Short-lived and shallow. Could it last a few days? But I don't know. With all of this, call it the Trump put, right? With the Trump put, with AI catalysts all over the place, with space catalysts all over the place, I think any kind of rate cuts are baked in. It's a hawkish rate. Let's have a correction. I think it's going to be short-lived. Maximum maybe 2 days, maybe just a few hours. Who knows? Maybe just 5 minutes. So I have a feeling my IWM hedge puts are going to go to zero. But whatever. Hopefully we'll get a little bit of a crash and I can get out of them.
Yeah, it looks like it's going down right now, actually. So right before
Anyway, so
Bitcoin looking pretty good, 92.7. Not too bad.
Yeah, I just wish I had more like the fly. I wish I went in big this morning because I'm getting killed on today on my Kodak and Bull, my top 2 picks.
Mm-hmm.
I mean, Bull's only down 1%, Kodak 3.5%, but I'm highly levered in both of these. So, I needed like big exposure in the top pick today, and I didn't do that. Just got some marginal exposure in fly. So I'm most assuredly down nicely for the day at this point. So I don't know. I could have done better, I guess, by having more exposure to space. I had very good confidence in the morning, and the morning show that space would buck the trend even in the face of FOMC. I specifically called that out, and that's why it was that category was the number 1 pick of the day, because I thought the catalyst FOMC risk today. What's that?
You cut out.
Yeah, no, I just thought the SpaceX catalyst was strong enough to overcome FOMC risk today. Shy saying there's some news on B. I sold it. I had like a 0.25% position. It's stable, little penny stock with an FDA approval of something or other, but whatever. I'd rather kind of be in these larger caps. And biotech is hard, I gotta say. It really, really bugs me so much, man. And his try, like I don't know. Now he blocked Izzy. This is crazy, man. Oh, he got blocked a while ago calling a stop talk out. He said, "Oh, okay, so that's
not recent, but it's happened." Hey, I call people out. You guys know that. I have no problem calling people out when they have talking nonsense. People are out of their mind sometimes. Like that. Like, you act like you're the only one that exists. It's like, what? There's a ton of people that do really well. And like you said, you give credit where credit's due all the time. There's no reason not to. There's plenty of people making great calls nonstop. I mean, it's just all over the place. And so yeah, and there's plenty of people in this space where everybody can have great communities and still embrace each other and be like, yeah, you do great. So I agree.
Yeah. Anyway, let's see. Something here. Before the liftoff, it was delayed. Liftoff was delayed. I forgot the new date. Check morning note for the latest schedule. Let's see. It's 1:51. I'll get the YouTube TV on shortly.
9 minutes. We'll see.
Yeah, and I'm not going to try to play it this time. Like Yosef was saying this morning, every time he tries to be cute and make money on the volatility, like it worked for me one time, maybe more than once, but one really sticks out where I was trading TLT calls on a FOMC decision. It must have been earlier this year, or maybe
I do remember when you were doing that, because I remember you talking about it.
No, you remember like the second or third time when I lost money on it. But
okay,
but
I just remember you talking about TLT.
Yeah, I did it. Yeah, I did it earlier initially, and on TLT, and I made like 100% in call options in like, I don't know, 2 minutes, and then it corrected, and I got back in. And then I made another 100% on the same call options in like 2 minutes. It was crazy.
That's wild.
It's that experience. It's like the extreme volatility is like crack cocaine, man.
know.
So I had that experience on FOMC day. So ever since, I'm like, okay, let me try that again. And like the subsequent 4 or 5 times since, I haven't been successful doing that. So I guess I'm just not going to try it anymore, aside from this IWM hedge that I have now, which I kind of, I don't know. It just doesn't seem like it's going to work. I don't know. I don't see any fear in the market right now. So I guess I could just be throwing money away on this IWM hedge, but I try to listen to the Godfather as much as possible. I pick and choose when I listen to him and when I don't, and I listen to him on this one, and we'll see. AVAV, by the way, 200 DMA 234, 235. Not quite there yet. When it does get there, I might step into AVAV in a couple days or next week.
232, you said?
Bounce off the 200 DMA, wherever that 200 DMA is.
Yeah, right around 230,
Yeah.
230, 234, something like that. I
The
can't tell.
IWM Bitcoin at the top over here. I'm gonna move these space stocks. Wait, Fly's the number one pick of the day, so we'll move it up. Redwire at that too, and then Kodak, Bull, DVRG. I'm still in $15 calls expiring this week. Showing some decent strength over here. Let's see. Wow, look at that plab. Whew. Oh, I got back into this at 236. I forgot.
Oh, it cut out.
4 cents. That's ridiculous, these cutouts.
I know, stupid StreamYard.
You know what? I'm going to play. I'm curious. I'm going to play the. Let me put on the TV. I'm curious if it
cuts out at all.
The TV audio also, or if it's just my mic. If it's
Good
system
question.
audio or mic audio. We're going to find out in a second. Let me put on CNBC.
Is that mic plug? That's a USB plug, or is it a what's it does plug in? Okay, so it plugs in somehow.
It's USB, yeah.
I didn't know if it was like a wireless one.
I mean,
it's hardwired in, so that shouldn't be an issue. I was just wondering. I thought maybe if it was a Bluetooth or something, maybe that could be the issue. But it's not going to be that.
Let's see. Let's share the screen and audio.
It is, and the best thing you
can hear that audio?
Yes.
I'm going to go on mute. Let's listen for a while.
Happiness, stress, and general feelings of
Well, we don't need to listen to commercials. Hold on. When they come back.
Let us know when they come back.
Yeah, when they come back, we'll play it, and then you can let me know if it cuts out at all.
If it cuts out at all.
Yeah,
yeah, because you didn't cut out during that entire Zoom meeting. I was like fascinated. I was like, hold on. It caught me by because I was like, wait, I didn't say that you cut out this entire time, and I'm just so used to doing it now. Because it just it makes a sound. It goes, and then it just cuts out for a couple seconds. It's really weird.
Yeah.
And then like and it's always when you're saying something like numbers or something, and you're just like, well, I wanted to definitely hear like that. It wasn't like anything that you could really miss. You're like, well, you got to say that again because we missed it. It's weird, and you just have no idea it even happened. So
I'm just going through like really. There's nothing really good except space stocks. It's all about space stocks today. Nothing else. The breadth is actually not good today. It's just space stocks. Man, do I wish I had larger size on my space stocks this morning. Okay, hold on. Here we are.
Reserve makes a call to likely lower interest rates or does not. The odds of a rate cut just under 90%. So the market is expecting a cut. So if we do not get one, stocks, they could fall. Or if Jerome Powell's comments about the future of rate cuts are not as optimistic or as bullish as some expect, stocks could also fall. It is arguably one of the most impactful potential meetings in a long time. And ahead of it all, here's how the markets and your money are setting up. And as you can see, no big positions being taken either way. Dow's up a touch. S&P and NASDAQ are down a touch. Stocks mixed. Investors, traders really all in a holding pattern ahead of that Fed. Bond yields, they've actually moved a little bit up into this decision. 10-year rates a little bit down now, but we were just at 4.2% yesterday. And by the way, the average mortgage rate in America, 6.19%, according to Fannie Mae, because you may not care about what interest rates are, but you might care what borrowing costs are for either a house or a car. Kelly Evans.
You absolutely do. Real quickly, there is a standout in the markets today. Don't lose this one. GE Vernova is up 15% pretty much to a record intraday high. The best
God, we were looking at this last
shares
night.
have more than doubled this year. The company issued strong guidance at its investor meeting. That'll do it. Key to that guidance, Brian, multi-year demand for electricity from some of the world's biggest tech companies. This is one of my favorite stories. We don't have time right now, but the GE spinouts and how well they've done. Vernova, which was supposed to be a wind company, now is doing as well as it is fascinating.
Well, turbines, all the money is in turbines. You want to power that through a pipeline, through a natural gas power. I love that everybody is suddenly now interested in energy. All right, let's get right now our all-star Fed panel.
Dude, I'm
Central,
up on my
not just
audio
for
inputs.
today's
I'm selling a
decision,
third of
but
them right
also
here.
the markets and meetings ahead in January, March, and April. Very pleased, as always, to be joined here in studio. David Kelly of JP Morgan Chase, Francis Donald of RBC Capital Markets, Jim Karen of Morgan Stanley joining us remote. Jim, welcome as well. Francis, I'll start with you. Your expectations for today.
They're going to cut, but I got to tell you, today is not about this
sold
Fed
half of them.
decision
I'm
for
up on
me.
them.
It's
Wow.
about what it continues to reflect about an incredibly complicated economy. We have very limited data visibility. We know that employment is softer, inflation is rising, the economy is fragmented into that K-shape we all know about now. And let's not forget, we have a once in 100-year trade shock. How is the Fed going to explain all of this to us, and how are they going to set us up for 2026 in an economy that is decreasingly interest rate sensitive and yet still has its firm eyes on what Powell or Powell's predecessor does next?
Would you consider David Kelly today to be what they would say is a hawkish cut, but with cautious language?
It's kind of like when parents give a kid, okay, you can have one more cookie, but this is the last cookie.
It never works
until the next
No,
one.
well, exactly. But I think there's going to be it's going to be a cut. We could get multiple dissents here, and I think they're going to really push it out and say, don't expect another near-term cut.
Jim, I don't want to look too far ahead of today because it does matter. 90% chance of a Fed rate cut today. Looking at the CME Fed Watch tool, you got about a 25% chance in the market of a rate cut at the January 28 meeting, first one of next year. Where do you land on the next possible cut?
So on the next possible cut, it's going to be all dependent on what happens in the labor market. The labor market is really the key messaging for the Fed. The Fed has to be careful, though, right? It doesn't want to walk into a policy mistake by being either too hawkish or too dovish, because the path of least resistance right now is towards higher bond yields, which is not necessarily effective or a good thing for markets.
Yeah.
So if the labor data continues to weaken, if it softens further, then I think January is very much on the table. If it doesn't, then we're going to kick the can down the road.
Presser.
Yeah, we're going to find out here in about 15 seconds.
Q's and spies are moving.
Mixed trade. You got the NASDAQ slightly down, the Dow slightly higher, the 10-year yield right around 4.16%. Let's go now to Steve Leisman.
Look at Bitcoin breaking the high of the day.
Interest rate. Steve.
There we go. There we go. Boom.
The Federal Reserve reducing interest rates by an expected quarter point to a new range of 3.5 to 3.75. There were 3 dissents. The first time that's happened since September 2019. 2 were against the cut, including Chicago Fed President Austin Goolsbee, along with Kansas City Fed President Jeff Smith, his second dissent in a row. Also, another dissent for a 50 basis point cut from new Fed governor on loan from the administration, Stephen Myron. To recap, the vote was 9 for cutting a quarter, 2 against cutting, 1 for cutting 50 basis points. The
Only
Fed
2 against
signaled a
cutting.
higher bar for the next cut, using language that it's used in the past to do so, saying that it will assess incoming data to determine the extent and timing of future rate moves. That language it used it last December to signal a pause. The rate outlook suggests consensus for just 1 more cut next year and 1 more in 2027.
I sold the rest of my
But as
puts
I'll
here.
get to when I
If
talk
I don't
about
like
the
the
dot
pressure,
plot,
I'll
a
get
lot
back
of
in.
disagreement.
There's still
Before
some
the
good
dot plot, though, I want to talk
value in
about
there.
some pretty big news when it comes to the balance sheet. The committee making a determination, it is now at what it calls an ample level of reserves. So it plans to initiate purchases of shorter term treasuries on an ongoing basis. And then a separate document was specific, saying the Fed will begin buying $40 billion in bills starting December 12th. That's just a couple days from now. And I believe that's sooner than the market expected. And those purchases will go on for a little while at an elevated level because of seasonal demands for
QE.
reserves that are out there before coming down again
QE
in
starting
April. That's what the
2
document
days.
says.
That's
Outlook on the
a bullish
economy
surprise
in the
maybe,
statement.
guys.
GDP outlook was stronger next year in the Fed's own forecast, up 0.5 point to 2.4%. So pretty big move there in the outlook for GDP next year. The inflation outlook lower for next year by just a tick, down to 2.5%, just about hitting the target of 2.1 in 2027. The statement says the economy is expanding at a moderate pace. Job gains have slowed and unemployment has edged up. Just a note, the statement no longer says that the unemployment rate is low at the current rate. Inflation is seen as somewhat elevated. Economic uncertainty also elevated. Back to the Fed outlook and the dot plot real quickly here. Only 2 dissents, but 6 officials in total wanted no change in the funds rate according to the dot plot. So kind of a soft descent in that regard, you can call it. 7 want no change at all for next year. 11 only want 1 cut next year. One person, and we can imagine who that is, Stephen Myron, just guessing here, wants rates down to 2.12% next year, or 150 basis points lower. And that is the statement and the outlook for rate cuts and the balance sheet. Mr. Sullivan.
So
Quickly,
it seems
sir,
a little
you said
less
buying bills maybe
hawkish
sooner than the
than
market
people worried
expected.
about.
This is not QE. I do not dare call it that. But is this like the son of QE, quantitative easing light?
You know, Brian, people are going to take off on this, and I don't want to stop the craziness that'll happen in social media and on the interweb. The Fed will say this is maintenance of its balance sheet at a level of GDP of where it was. Some people, however, will call it QE light. Some people will call it son of QE. I believe the Fed will say this is neither, that this is simply maintaining the balance sheet at what they call the ample level of reserves, and that will cause them or prompt them to begin buying $40 billion of bills. It looks like 3 years. They also may go out a little bit into the bond market as well, but they want to stick to the short end of $40 billion a month until about April, when they say there'll be a sharp decline in there. And Brian, call it what you will.
Let's see what Rick Santelli calls it. Steve, stay right there as you continue to dig through this. The market reaction initially showed a very dovish tilt. We have stocks moving to session highs. We have bond yields falling. Rick, your interpretation?
Well, my interpretation, Steve nailed it. I don't disagree with social media going hog wild. They could put any spin on it they want. Ample reserves to deal with the reverse repo market issues, but it is QE, call it QE light. And once again, I have an issue with this, and my issue is simple. Every crisis, they expand the balance sheet by buying securities to manage rates or manipulate rates. Pick any M word you want. But in the end, this is something to really pay attention to. And finally, the markets themselves, we saw a couple of basis point drop pretty much across the whole curve. 358 down to 356 in a 2-year. 10s were hovering right around that 416 level. They dropped about 2 basis points to 13 and change. They're right back to 415. What's notable is where we were this morning, as Brian pointed out, the fact that we're toying with 420. Remember, we closed at 457 last year. We're getting ever close to unchanged on the year, on a year that many analysts and experts thought we'd be spending a boatload of time under 4%. We've had a total of 8 sessions close under 4%. The dollar index, no surprise there. It's down about 1/3 of a cent. It was down about 1/4 of a cent before the statement was read. It's definitely toying with this 98 3/4 to 99 level. It seems to have lost its hunt for 100 recently, but that makes sense considering the Fed's easing. And finally, the next meeting, January. Many are talking about the January 28th meeting. For a while today, we had about a 30% probability of a 1/4 point ease. That's now moved to around 24%. It's been bouncing around a bit. If you look at the March 18th meeting, that's also hovering around a 25% probability of a 1/4 point cut. But basically, the real issue for 2026 is how much the market's going to pull out on the easing mentality as we continue to get data that certainly doesn't look like the labor market is dying.
Look at IWM,
and with terms
Here
of
we
inflation,
go. Several dollars
not a
higher
lot's
coming, I
changed in the
think.
last 16 months. It's sticky.
Why? Let's go, baby. Red wire. Come on, baby. Let's go.
Rick, appreciate it. And we'll
Pump
circle
it, pump
back
it.
in a
Let's
moment.
go.
But let's get more from Mike Santoli. Mike, on what jumps out to you about the market's reaction here and what the Fed just told us.
Yeah, sort of net positive. I wouldn't say it's a real vociferous reaction. Obviously, it's during the press conference that we sometimes get more of the swings or the rethink or the unwind of the unwind. We know the drill on Fed days. But there has been a value over growth, cyclical stocks over defensive stocks, financials leading, especially banks. That has meant that the market has been kind of revving in this direction of anticipating a firmer economic performance in the early part of next year. We could be proven wrong on that, but the market seems pretty resolute in trying that hand. And I don't think that today's cut and going on
inflation,
hold because we weren't priced for further cuts in the coming months is necessarily enough of a surprise to disturb that in any respect. I mean, the Fed was on hold from December of last year till September of this year, and we had other things moving the markets around, but it was not really a rates issue. So the longer term coming in a little bit in yield, maybe that does loosen things up a little bit, although I wasn't particularly alarmed at the level that long-term yields had gotten to in this run.
All right, Michael Santilli. Michael, thank you very much. All right, let's go back now to our panel. We got Jim,
Fly, baby,
Francis,
fly.
and
We're
David.
on.
Francis,
Let's
I'm going to
go.
go to you because let's talk about the job market. And I'm going to compare the last meeting minutes, and you'll forgive me, I got to look down and read it. Here's what they
Q's
said.
are ripping
The
too.
last meeting minutes about the job market. They said the unemployment rate
Galaxy,
has
let's
edged
go.
up,
32,
but
33 in a couple
remained
days.
low through August. So they said, oh, okay, it's edged up, but it's low. This year, first paragraph, the unemployment rate has edged up through September, hard stop. So they seem to be acknowledging that the job market has weakened a little bit. I guess that changes the odds of a potential rate cut.
I like your word a little bit, because if you look at a chart of the unemployment rate going back to the 1970s, it's only been this low 2 times over that period, Brian. So I'm wondering why this is suddenly not low, particularly that we've only seen what I would consider a normalization in the labor market. In particular, this hasn't been broad-based across all age groups. It's been really focused on young individuals in the United States. So is this really a labor market that's quickly deteriorating? It doesn't look much like that much-feared hockey-shaped movement to me. Meanwhile, inflation has been above target for 55 months. So if I was looking at the bulk of the data and I looked at that dot plot and I looked at the Fed's forecast today, I would be saying, oh, they must have decided to hold or hike in that type of environment. What I want to hear from Powell during this press conference is, how the heck did you convince this committee to end with a cut
Well,
today?
David, did they convince it? We had 3 dissents.
Well, no, and it sounded like we could have had 6
More.
dissents.
6
dissents.
They
If people-
dissented on what they call the dot plots, which I hate that term. It's like the Fed's light bright, where they put in where they expect rates to be. 6 non-moves on that, 3 actual dissents. So 3 people, I'm sorry, I'm going to say this, 3 people chickened out. Well, they wouldn't go on the paper and say, I disagree.
Well, exactly, and you can see that from the language in some of the speeches that we saw after the last Fed meeting, which actually convinced markets they weren't going to cut today, because some of the, particularly the regional bank presidents, are really hesitant to cut, at least in what they say. But then when it comes to it, they give the kid another cookie, and actually it's a slightly bigger cookie than expected, because they got this extra liquidity for the short end. But I do think this is more dovish short term, but still pretty hawkish long term, because if Steve's reading of this is right, they've upped their estimate of GDP growth next year by a lot. We've got all these income tax refunds that are going to kick in the first half of next year. That's going to push growth higher, regardless of what the jobs market is doing right now. And it sounds like there are very few members of the Federal Open Market Committee who want to do more than 1 rate cut next year. And if you're only going to do 1 rate cut in the year, when are you going to do it? Maybe you wait all the way until December. So we're going to have it's going to be interesting here with the Fed perhaps
All
going
this
in pause in the first half of next year.
All of
and,
that
like,
said, maybe we can put this
trying
on
to
the screen.
forecast how
The
many
tech
rate
ETF,
cuts
we
in
were
the
talking
following
about
year.
this
It's all
yesterday on a
bullshit.
12-day
It
win streak.
constantly
Well, it's now in the
changes.
green after
It
this
Just
constantly
morning.
changes.
nonsense.
Possibly have a
As new
13-day
data
stretch
comes
that would
in,
be
these
its
people
longest in about
pretend
8
like they're being
years. So
smart.
that's meaningful.
We got to
We
kind of
also
take
have
it day by
silver and
day. I'm
gold
sorry.
on the positive
I
and on the
agree.
rise.
Just look at poly market every day. They tell you exactly what's going on.
I think John Spallanzani's phrase.
These guys don't have a clue.
He calls
Too
it,
many
says, the
pundits
repo
thinking they can
vigilantes
tell the
won.
future.
Because the
You
big
can tell what's
headline for
going
a
on
lot of people,
the
even
next
those who
couple
are more
days, but
bearish on
beyond
bonds,
that,
is
come on.
the Fed's,
Yep, 100%.
maybe it's just bills, but it's
Not that far
the
out
action
anyway.
is now
You
coming a
can't
little bit more
tell.
quickly than people thought. What does it tell you?
Especially these
Hey,
idiots.
Listen, I think that's a great way to frame this. On balance, this to me is a more dovish meeting. Now, yes, it is true, and
Yep,
I would
agree.
really
It
say
just
that's
cut out.
ironic, right? And I think we have to see the irony.
The
in
audio
this.
of YouTube
The
cut
Fed has
out.
basically raised the bar for the next rate cut, right? So we still think they're going to cut, but it's going to be a higher hurdle for them to do that. However, they did surprise the market on the dovish side by moving that balance sheet management from what many people thought was going to be early next year to actually what's going to happen starting right now here in December. The Fed is basically telling us that they want to have pro-cyclical policy, I mean they want to support the growth cycle. They're going to stand at the ready to cut interest rates if the labor market deteriorates further. And at the same time, they're worried about liquidity. They want to add liquidity back to markets. Call that reserves, call it what you will. The point, though, is that we need to get over the year-end turn, right? So liquidity constraints might come in at the end of the year. And the Fed wants to avoid that type of a stress in the marketplace. So net, the fact that they're willing to start to inject this liquidity, worry about reserves, and that's a lot of what's going to maintain, I think, some of the bullish sentiment in the markets, which is what we're seeing reflected, is actually the net dovish component, even though they raised the bar for the next rate cut. So I think it's a bit ironic.
Well, also, Jim, back to you, because a lot of people are listening or watching at home going, all right, this is great. What do I do? Well, to Kelly's point, the NASDAQ ticked up, the XLK on pace for its 13th straight day of gains. That would, I think, tie for an all-time record, or at least going back the 8 years. Why did stocks move up if prospects for more rate cuts went down?
Yeah. So effectively, one of the big concerns that was in the marketplace was that the Fed would have very inflationary policy, that they would be dovish and that they would push these long end rates higher because whoever the next Fed chair is, could potentially cut rates a lot. What the Fed is telling us right now is that they're not willing to do that. So what that's doing is it's stabilizing the back end of the yield curve. It's allowing the equity markets now to say, oh, we don't maybe have to worry so much about this inflation impetus that might come out of a Fed that's too dovish. So again, ironic. And that is actually something that's very supportive for the equity markets if rates stay relatively stable and well contained.
Yeah. And Steve, you want to jump in here?
Yeah, I wanted to back up what Jim was saying about the dovishness of the balance sheet decision. We asked in our Fed survey, which we released yesterday, about the balance sheet expectations, and it was for purchases to begin again in April. So this is quite a bit earlier, and for purchases to average just about 28 or 30 billion. So this is more than that. So on that front, for sure. I would also point out that when I'm looking at the immediate reaction of the market, it's a little bit more dovish in terms of that next rate cut. We had it more fully priced in for June before the statement came out, and now it's about a 57, 58% probability for April. That's going to bounce around. And all of that said, this entire discussion, I would point out, may go out the window next week when we get October and November employment numbers, as well as some inflation numbers, and we'll figure out if the Fed made the right call here and whether or not the forecast is worth either the paper that was used to print it or the digital space it's taking up on the web.
That's an excellent point. As always, Steve Leisman. Francis, the Fed has two mandates. I mean, people forget about that. We always talk about inflation because of what happened during COVID and prices spiked and inflation was 9%, blah, blah, blah. But they also have the jobs mandate, maximize employment. How do we read the jobs part of the picture vis-a-vis what the Fed may or may not do?
I've been thinking a lot about this because I keep wondering to myself, how can you be cutting interest rates when inflation is this high and per our forecast going to be heading higher? In fact, it's really hard to see when that next cut is going to come through. I have to agree with David here. When is the window to do that? Because by February, we see that inflation side moving higher. And yet, Brian, this is not interest rate driven inflation. This is tariff level inflation. This is inflation that is coming from a labor market that is shrinking, immigration, retirements that are coming through. And part of me wonders if this Federal Reserve is saying our interest rate policy is far less relevant to the inflation side of the picture than it is to the job side.
Okay, let me follow up with that. Do we ignore, I hate to say this, do we ignore inflation? If exogenous factors, tariffs, whatever, are contributing, labor costs during COVID, whatever, if they're contributing to inflation and there's nothing the Fed can realistically do about it, should they cut rates anymore at all?
Well,
why not raise rates?
Here's the rub here. The problem is if they don't actually contain inflation, it can spiral out of control. So you start with tariff level inflation, you start with some wage pressures that sort of create a floor underneath. If you don't respond to it properly, if you're too easy, then that can start to spiral. But there's another elephant in the room here, which is that we have phenomenal amounts of fiscal spending. And how funny it is to me that we spend so much time attributing monetary policy to inflation. Policy is also very inflationary. So the forces on inflation are wide ranging and shouldn't just go to the Federal Reserve policy. So it's not a surprise to me that their bias is towards the labor side of the mandate.
Well, I think the other part that we're not talking about is just how high the equity market has been. I mean, this is the end of 3 booming years for the equity market. And I personally don't think the Fed ought to be cutting aggressively or at all right now, but it's not because of what they're going to do to inflation.
So you would have dissented. You would have not have cut rates.
I would have dissented, and I would have voted the way I did with what I said, because the problem is that they have caused asset bubbles over the years by keeping rates at an unrealistically low level. And I think the danger is they're just going to cause another asset bubble. And when these bubbles burst, they cause tremendous damage. So there's nothing wrong with a federal funds rate at 3.75% to 4%. I think that's okay. The economy should be able to do.
The president would disagree because people want mortgage rates to go down to 5%.
Well, the mortgage rates, long-term mortgage rates are determined by the 10-year, not short-term rates. And if you scare people about inflation, or indeed if you cause a booming stock market, that actually will probably help keep those long rates higher. So I don't think. Anyway, why do we have a housing problem? It's not because mortgage rates are too high now. It's because the mortgage rates were way too low for a decade, and that caused prices to spiral out of to a level that people can't afford.
Who kept them low? Who kept them?
Well, the Federal Reserve.
There you go.
No, exactly.
Thank you.
But that's exactly my point. The Federal Reserve should aim for a relatively neutral level of interest rates, and honestly, that's where we are right now.
I'm going to paraphrase Animal House. You screwed up. You trusted us. David Kelly, Francis Donald, Jim Karen, Steve Leisman, thank you all very much. All right, let's get another check of the bond market because, Rick, as David just adroitly pointed out, the bond market is going to determine rates, not the Fed.
Well, quantitative easing would argue with you. The market can only do so much. If the Fed starts pulling out securities from the marketplace, affecting supply and demand, it does make a difference. Now, to that end, the yield curve is steepened a couple of basis points. Now, I understand many out there are saying, well, a couple of basis points, but it is significant how it's doing it. So a 2-year note right now is almost exactly 2 basis points lower than before the statement. The 10-year is exactly the same. Arguably, the yield's a little bit higher. So we've touched 60 basis points in the 2-10 spread. And I think that is something to pay attention to. It doesn't surprise me that the shorter maturities are looking at this in a more dovish way than the long end, because the long end has not only to try to distinguish between what's going on with the economy and the Fed, but it also has to keep an eye on things like debt issuance and just total debt around the globe. We did postpone today's $22 billion 30-year bond auction because of the Fed meeting. We'll have that tomorrow, but I think it'll be very interesting to see how that demand goes. And then finally, Steve Leisman pointed to some of the percentages and probabilities in Fed fund futures. And I always put a word of caution that these things are just markets. They change moment to moment. But the next meeting that even is close to the possibility of an ease, anything over 50%, that would be the June 17th meeting at the moment. Back to you.
All right, Rick, we really appreciate it. And I think it's a good point to make that as this kind of settles in for the past 20 minutes, markets are looking a little bit more on the bond side like they were pre-decision, although equities are still near session highs. Let's talk more about that now with Jeff Kilberg. He's the founder and CEO of KKM Financial. What do you say, sir? Welcome.
Well, Kelly, kind of a surprise. Everyone was looking for a cut in rates, more hawkish. And we actually got more. If you think about that $40 billion they're going to start purchasing in just a couple of days, that's annualized $500 billion of new QE. So with a $6.5 trillion balance sheet, I think a lot of folks were surprised. That was the initial reaction in equities, but you're seeing a little bit of a shift here and we're waiting for the presser. But I think this was much more dovish. And I think Fed Chairman Powell is keeping his job for another month because that's the one that we haven't talked about yet. And I think the long end of the curve is not pricing the fact that he may not be here in May of 2026 if President Trump has his way.
So right when the decision came out, you were standing right there and you heard me say, this is the son of QE.
Yes.
Or QE light. Because to me,
that was very helpful. Usually I don't get much out of the CNBC conversation, but that was very, very interesting to listen to. And sounds like the consensus is there were
You just cut out.
Well, how many times did the YouTube TV cut out?
Just that one time, and it was very brief, not as much as you. So I think it might be your headset.
Maybe my
or
mic,
microphone or something.
or it's whatever software that interacts with this headset.
Yeah, it could
And you know
be.
what? That is the newest thing that happened. Was I bought this headset?
Yeah, it didn't happen, and that one that cut out. It didn't
Hold on,
really
let me
make that sound.
switch to a crappy headset. 1 second. Hello, can you hear me?
I can.
All right, let's see if this one cuts out. So going back to my older headset, which is like a mess. But anyway, yeah, that was very helpful. It does look like it's much more dovish cut than people were fearing. We got 8 minutes, and I gotta use the to get too much info, but I gotta use the restroom real quick before 2:30. But yeah, man, I just love these charts underneath where we're seeing breakouts everywhere. Galaxy breaking out, ASTS breaking out, and I use these as clues to tell me what the index can do. And I keep on saying this IWM is not overbought yet, man.
Nope.
So
not even really close. It looks like it's about to curl up and run right now.
Not even close, to be honest with you. That's correct. This thing, you know what? I gotta say, I'm bullish at the moment, but that can always change during the presser.
Was I crazy for having Q calls going into that?
Oh, you did? Yeah, good job.
I didn't say anything because I thought it was a little crazy. I didn't want anyone to follow my lead, but I didn't even get a lot. I just had a couple and I sold them. So it was a nice little pop up. I was like, I'm just gonna gamble.
Yeah, and then
I just wanted action. That was about it.
I think Fly is going to $23 at this point. I think Bull's going to 1060. I'm in the next NX.
Kodak should try to rebound a little bit here.
This is not Kodak's day. You got to be with where the momentum is today, which is the space stock.
Space guys.
Yeah, all these space stocks and maybe now the Bitcoin stocks.
They're gonna move.
Pull back on Bitcoin for a second.
A little pullback on
Galaxy. It's good news right now that we're holding above that 20 DMA.
And Galaxy looks pretty good to try to continue up again. What did you say? 32 or
30?
something?
Yeah, I think that 50 DMA is in play.
32.89.
Maybe by Friday. Yeah, maybe by Friday.
Yeah.
But like I always say, and everyone always says, it's the QA that matters, and everything could reverse. Certainly a possibility.
Absolutely.
We've seen it happen many times.
Well, it's funny because the Qs and the SPYs are pulling back right now, almost to reverse to go back up again after the Q&A. So the market doesn't look bad.
I gotta use the restroom, so you could.
I'll chat away.
A few minutes, yeah.
How is everybody this afternoon? Did you like the old rate cut right there, right across the board, 0.25s? There you go. Remember, I was saying before the government shutdown that they had no choice, that you would see that all the way to the end of the year, and boom, there you go. So pretty interesting for sure. And I'll read you what this says, this daily digest. If you check out the FinViz, and I use it all the time on my night show and all, it's really cool. They give you the breakdown of the day, like everything going on during the day. Is pretty dope. And stocks edge higher as Fed delivers unexpected rate cut, but signals caution value and small caps outperform. And it just tells you like a bunch of stuff that's going on and breaks it all down. You can check that out, but I check it out now. It's pretty helpful. Gives you a good little quick update on what's going on in the markets, and your Qs are hitting the 50 on the minute chart, trying to bounce back up. I thought that was a little crazy to play that going in, but for some reason I just thought it was going to go up a little bit, and it did, and I got out of it. It was a quick little scalp, and it ended up working out well. So I got lucky, I'll say, but I wouldn't have suggested it, and that's why I didn't say anything, because I was like, I don't think I want anybody to try to follow this lead. I think it might be pretty crazy and I'm about to lose, but it worked out. And as soon as I bought them, they went down and they went up. So I got lucky on it, and there's that. So quick little scalp trade. I was like, well, if we're going to sit here and listen, I'll buy a couple Q calls, and I had them 0 DTE, so it was either going up or going down, and that was that. So that's why I wasn't gonna suggest that play at all anyway. So it worked out real quick. And let's see what else is going to work out here besides our space ones. I mean, ASTS up today, and Galaxy not looking bad, like we were just talking about. A little bit of pullback right there. And here's Ben. He's already back. That was quick. And 2:30 coming up. It's 2:26 right now, so 4 minutes. And who's going to be in New York City this Saturday? I just got my parking spot. Actually, you have to rent a parking spot ahead of time if you're going into the city. So if you are driving in, you better go on parking.com and get yourself a parking spot ahead of time, because parking is crazy in the city. And it wasn't even that expensive, actually. It was only like $40. I couldn't even believe it. So I know parking can be like $100 over there with no problem. But anyway, that's if anyone's going in. Joseph is going. Hopefully Joseph Levy and a bunch of other people will meet Rhett and Ben for the first time. So that'll be fun. So that'll be Saturday night. And let's see what else is going on over here. Your SPY is pulling back. Your Qs, like I said, they might be pulling back right here for this Q&A to start running back up. Maybe we do more Q calls real quick on this Q&A thing. It's not looking too bad. So just giving you as a quick heads up on that. And what else is going on? That Velo was up there still today. That one
Still
was
down. Don't love that.
Yeah, that Velo stayed up there today. Not
Yeah, I
bad.
know. I know.
That was looking pretty good. And obviously your fly was flying right around noontime, especially. A little pullback, but nothing crazy right here.
I want to take a scalp win on this next store. I'm up on it for my latest entry. 235 to 245. Get that little win in there. Well, I did buy some Bull and Galaxy on this pop. Not Galaxy, I'm sorry. I bought some Redwire and Bull, so that was bad. I also bought some gold. So these three so far not looking good. That's the only thing I did actually since the news came out, other than just taking profits right now on Eric Jackson next door. So I did sell the IWM puts, which I sold half of them for profit right before the decision. And I sold the other half for a loss, but not a massive loss right after the decision. So I think I made a good decision on that. But man, I can't figure out gold lately. Cannot figure it out. It's 229. And here we go. Let me share the audio. Let's go.
That's 100%.
It is.
That
I'm
stocks
gonna
are
go on
going
mute
higher
for a while.
over the next year on this cut.
It's not going to be a straight line, Sully. It never is. But when you see the VIX in conjunction with that stat, when you see the VIX, the decay in the VIX, just remember 2 weeks ago when we were a little bit squishy about the actual Fed interest rate cut happening or not, we saw the VIX go up to 28, went back down to 15. When you see that vol get crushed like that, that's when you see people really feel good about equities on a 30-day lookout. And then, yes, that's that, Sully. 20 out of 20 times higher a year later.
What are you listening for as he kicks this off, Kilbert? What kind of feeds to you the bullish narrative versus bringing some doubt into what they've just done?
I think I want him to really kind of give us understanding, will he be sitting on his hands in the next quarter? Because a lot of folks are thinking that we are going to see a rate cut, if not two. Goldman's in the camp that we could potentially get 2 rate cuts in Q1 of 2026. So I want to hear something as he kind of positions the ability to kind of hedge, which he always does a great job of, but that's what I'm really looking forward to get a better understanding. I don't care about the
And there is Jerome Powell. Let's listen into the Fed chair.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs.
Here comes Bull, 1050 target.
In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%.
I grabbed a bunch of Q calls. They're flying right now. So
What do you grab?
I made up all my Kodak.
What do you get?
I had Q calls going.
Oh,
in.
nice. Good job.
There is no risk-free path.
I said it. I was like, I think we should do the Q calls again when you were away. And holy cow, yeah, it made up my Kodak losses completely today.
The effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 0.75 percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September.
Did you hear that click when I hit it right at the top there? That was pretty good timing.
And leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement or repo operations are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Leading indicator, guys.
At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending has held up. It's been resilient, and it to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually some of that is due to the shutdown. So you can take 2/10 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here? And have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment and the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing, but that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against a cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions bar for cuts in the near term, and what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you ultimately where do you think the bigger risk is? And it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see. And I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views. And we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come. But I think ultimately, having cut 75 and, the effects of the 75 basis points will only begin to be coming in. As I've said before a couple of times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted. And that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that the what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say again, these are good, thoughtful, respectful discussions. And you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down? Or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year, but when people are writing down their estimates, is either holding here or cutting a little or cutting more than a little. So I don't see that. I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150
That may have been the money exchange right there.
Today.
No
so
increases.
I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral.
Markets is going up right now.
Place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see,
I think
any
that
kind
was
of a
it.
sharper downturn, which we haven't seen any
That could
evidence
have
of at
been
all.
it.
At the same
Any
time,
other breaking news, but
policy is still
I think that was
in a
it
place
for now.
where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would point to a couple of things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs
that was at that moment,
averaging 40,000 per month since April. We think there's
it was
in these numbers by about 60,000. So that would
Right,
be
we have a
shoes are ripping.
Yeah.
What are you saying, Ben? We got to log off here. And
I know.
Just to
How are we
point
going
out
to
one
do
other
this?
thing,
I don't
surveys of
wanna
households
lose
and
this
businesses
people.
both show declining supply and
Is
demand
there a
for
way
workers.
to keep this stream going?
So I think
Where's
you
our
can
next
say
meeting?
that
Is it in?
the labor market has.
You can't really do it like that. No, you
achieved
can't be in
a
two
tool
meetings in one
gradually,
place.
maybe
So the
just
other
a touch
meeting is
more
on
gradually than we
StreamYard
thought.
also?
Yeah, you can't
Oh,
do it.
shit, guys.
In terms of
leave
inflation,
in,
we are.
we gotta
it's
leave in like 3
come in a
minutes.
touch lower.
Sorry, guys.
And I think the evidence is
all right.
Going.
Catch you guys later, and
Here
things
is
are ripping and looking
inflation
good.
Yeah.
Coming
Guys, you might
down,
want to prepare another
and
stream from X to
that's
YouTube
offset
or
by
what.
increases in
3
goods.
minutes, so we got to sign
And
off.
that goods
Sorry.
inflation is entirely in sectors where there are tariffs. So that does build on
What you guys have going on?
a story that this is
It's like
that the goods
corporate
inflation, which
meeting,
is really
unfortunately, that
the
was
source of the
scheduled from a long
excess at
time
this
ago.
point, that almost
cool,
more than half the source of the excess inflation
Alrighty then.
is tariffs. And
Good luck
you've gotta
with
say
that,
then,
and
so
I will
what do you
catch you
expect from
guys
tariffs?
later. You're going to be back on later for
It's-
some.
yeah, I'm gonna
is
try. I'm gonna
to
try
some
to do that
extent
part,
down
yeah.
to looking
All right,
at
45.
broader economic.
I'll look out for you guys.
Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things.
Man. That was a turning point.
And we
Remember
say that this was a decision to
Remember
make.
that. Said
It
no,
obviously wasn't
not
unanimous,
about
but
rate increases.
overall, that was the judgment
The debate
that
is
we
whether
made,
it
and that's
was
the action we took.
or cut.
Just on the ample reserves
cut
point,
even
how
more.
concerned were
That was it,
people
guys.
around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concern.
All right, Ben, I'll see you in the other Zoom.
This.
Okay.
I mean, the other StreamYard.
All right.
Balance sheet
I'll leave in
shrinkage,
3 minutes.
sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th.
Major breakout in
There's
NGB.
also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant,
443 maybe next
as it
target
relates to the
in a
banking
couple
system
days.
or to the whole
20 bucks
economy.
with,
And that
maybe on,
alone calls for us to
on the
increase
DBS.
about $20-25 billion per month. So that's a small part that's going on. It's also happening in the
American
context
Eagle
of a
52 week
temporary few month front loading to get
These are
reserves high
clues
enough
to
to get through the
the
tax
abyss.
period
Yeah.
in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman.
All right,
This
guys,
is the last
unfortunately,
post-FOMC press conference before an
I
important
have
Supreme
to sign off.
Court hearing next month. Can you talk about how you're hoping
I think we
Supreme Court
covered.
will rule?
I think
And I'm just curious why the
unless
Fed's been
something
so
else comes
reticent on such a pivotal matter.
we got that pivotal
It's
moment.
not something I
pulled
want
out
to
in
address
time,
here,
and I
Andrew.
think we're good, guys. All right.
We're
I'm
not.
sorry, I gotta go.
We're not legal
Sorry, I
commentators.
feel so bad. All right.
It's
I'll
before
be
the
back,
courts, and
at
we think our
45 on live stream.
we don't think that we help matters by trying to engage as a